Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you some money. My job, not just to entertain you, but to educate you. So call me at 1-800-743-CNBC or tweet me, Jim Cramer. So many of the top people in this business give up so easily on the best investments that it's a marvel anyone makes money in stocks. They're way too eager to capitulate. That's how I feel about two of my absolute favorite stocks, Nvidia and Apple, both of which exploded higher today on tremendous news, powering a market that looked soggy at the opening, but then turned around in spectacular fashion, with the Dow advancing 66 points, S&P climbing 0.44%, and the Nasdaq gaining 0.70%. I want to spend some time on these two, because it is vital for you to realize why so many people cannot make money in this market, cannot, or in any market, something I spend a huge amount of time writing about in my new book, How to Make Money in Any Market, which comes out next week. My premise has long been Wall Street and its media acolytes constantly encourage you to trade. Sell. And you're going to end up trading out of the best stocks of any era. As a result, you end up missing the biggest moves in these stocks because you know what? They occur when you least expect them, like today. Then, because so many people refuse to own stocks through thick and thin, the establishment says, well, it's impossible for you to make money in the market, so you might as well just stick with index funds. Forget about catching the big ones. You can't do it. Instead of getting the ones with the huge profits that could have been yours had you stuck with the stocks of Nvidia or Apple, which you know I like so much, you have to be satisfied with much lower returns. I wrote How to Make Money in Any Market to combat this terrible conundrum that continually keeps people from getting rich in individual stocks, something that can only happen with disciplined investing, as opposed to ill-advised, often reckless, almost always harmful trading. So let's take what happened today with the stocks of Apple and Nvidia. It is so instructive. First, Apple. For the last 2 weeks, I've been trying to get across to you that this launch of the iPhone 17 would be very different. These are incredible new models, including one that's as light as a candy bar in the hand. Sure, there's always the possibility of a belly flop, but for years, my strategy has been to own Apple, don't trade it. And the more I studied the new models, the more I realized these were really special. I figured they'd ultimately reward disciplined investors who stick with Apple as long as it offers the best products. That's been the thesis. And these are still the best products. Apple kept the faith of the committed investor, including my charitable trust, where I've demonstrated my fealty for years. If you didn't catch my enthusiasm in Kentucky when we spoke with Apple CEO Tim Cook at the Corning factory, where all the iPhone cover glass will soon be made, well, then you might have sensed it when I interviewed Cook at the actual 17 launch in New York City. But I was up against a negative narrative, a wall of negatives about Apple, spread by both the buy side, meaning the hedge funds, and the sell side, meaning the analysts. This narrative flooded the media. No, it owned the media, subjecting you to a constant barrage of pessimism about Apple that would make all but the most stalwart owners, or maybe the clueless ones, check out of the stock. Sell. We heard that the phones weren't that different from previous models. They were yawners. We heard that they wouldn't sell well in China. We heard that tariffs would hurt sales because the phones would cost $200, $300 more than people thought. We were pounded with that narrative list. Well, without any homegrown artificial intelligence, by the way, sales would have to be tepid, right? Incredibly, every one of those negatives that made you want to dump Apple, in fear, of course, is proving to be untrue. From the crowds mobbing Apple stores in China, it looks like the launch is going spectacularly. And they don't even have all the models for sale in the PRC. There are adherents for each phone. Cook told us that when you take the trade-in value and you add on the incentives from the wireless carriers, the price really hasn't gone up at all, despite the tariffs. As far as AI, Tim showed there's a remarkable amount of artificial intelligence in these phones. And as far as he can tell, nobody's switching the competition like a Samsung just for better AI. It's a yawner to the faithful. That negative narrative seemed busted to me. But going into today's session, Apple stock wasn't even up for the year. Then this morning, Mike Sievert, the CEO of T-Mobile, came on Squawk on the Street to announce his retirement. I remembered a few years back another time when people thought that Apple sales would be weak. But when I caught up with Mike, he said they weren't. They were terrific. That immediately turned Apple stock around. So I wasn't going to let him leave without asking him how this launch was doing. Here's what he had to say.
I can tell you T-Mobile's iPhone sales are at all-time record highs. We just had the biggest iPhone weekend. We're up double digits from a year ago, and you know what our last biggest iPhone weekend was? Last year's. We're up double digit from that launch.
Boom! Right in the face of a typical piece of bearish piece of sell-side research. It's this morning. The Apple bulls at last took charge of the story. The stock shot up more than 4% in response. It's a big cap stock. Unfortunately, as I explain in my book, the constant deluge of negativity that passes for research on Apple scared most people away. I hope it didn't scare you away from the stock. So I don't know how many people ultimately got to the promised land of profits. Those who say trade it, don't own it, got blown out once again. Another reason why the classic growth stocks, as I say over and over, should not be traded, just owned. And Nvidia, the ultimate own it, don't trade it stock, is another one. For weeks now, we've been bombarded with questions about demand for Nvidia's chips because of concerns about China. We followed every move of the negotiations between our two countries. All we've gotten are endless reports about intransigence on both sides. Because of the tough negotiations with China, it looked like Nvidia is going to stall out. Plus, we keep hearing from the usual knaves, fools, and dissemblers that China's catching up to us and surpassing Jensen Huang's fabulous company, ultimately leaving the United States in the dust. Then today, Nvidia announced a deal with OpenAI to build data centers with a capacity of 10 gigawatts worth of power. Do you know that's enough power to take care of 8 million homes? Nvidia will invest $100 billion in OpenAI as part of the transaction. Will put up $10 billion per gigawatt. OpenAI is privately held, but when you get a deal like this, it will boost the value when it comes public. And I figure Nvidia will continue to make fortunes from this investment. Sam Altman, the CEO of OpenAI, waxed endlessly in a CNBC exclusive John Ford Fabulous Job about the need for computing power to truly get what's needed out of artificial intelligence, and only Nvidia has the power that's needed. The value of the 9-year partnership is now self-evident. This announcement brightened the entire data center food chain, from the CoreWeaves and the Vertivs to the GE Vernovas and the Constellation Energies. I say, really, who cares about China? Only the people who traded the stock and are no longer in it, not those who owned it. Oh, it's discouraging. Anyway, the bottom line. It's incredibly difficult to make money in any market if all you're going to do is trade. Coming into this session, the enthusiasm for Nvidia and Apple is almost nil. Traders were short or gone. The public stuck in index funds because they've been scared away from individual stocks. But as Nvidia and Apple proved once again today, individual stocks are where the biggest money is, provided you got the fortitude to stick around and you aren't addicted to buying high and selling low, the ultimate result of endless trading. Let's go to Bill in Massachusetts. Bill.
Hey, Jimbo. It's Bilbo from Boston. I just wanted to thank you and your staff. You're doing an incredible job. You're hitting grand slams every week. It's amazing. I just want to thank you and your staff.
Thank you. Honestly, really appreciate that.
I can't believe how much I came along. You taught me so much. I used to say, boy, was I lucky. Boy, did I get lucky here. Now I'm realizing the education you've given me is amazing. I'm starting
you're
to
terrific.
Stocks.
You're terrific.
Jim, I really do. Thank you. What I'd like to know is, you told me to buy Reddit at $45 a share.
Yes.
It went out of the park, home run, and I would love to buy some more. It's down about 10%. What do you think, Jim?
Well, look, I think you own some. I don't think you need to. I would not, as you know from the club, I would not buy more and violate my basis unless it is down more than it is. I like it. No need to buy more. That's what I told a lot of people. Total Wine and More. A lot of them had Reddit. You got it. You got it. Just stay in it. David in Iowa. David.
Hi, Jim. Thanks for taking my phone call.
Of course.
Yeah, I'm interested in ConAgra. I see they're going to have an earnings report here pretty soon. The stock's been slipping in value, but the dividend's high.
No, you see, we want growth in stocks. We don't want dividends, particularly that are that high, because maybe something's wrong. We like to buy stocks for growth. That's really the only elixir that will protect you from inflation and will protect you at your portfolio from underperforming. Just pure growth, and ConAgra doesn't have it. Right. As Nvidia and Apple proved once again today, individual stocks are where the biggest money can be made. On Mad Money tonight, the Investing Club recently took a position in Boeing. I'm laying out why we made the move and telling you where I stand on the company. Then, with the averages making new highs almost every day, is there anywhere you can still put new money to work? I'm giving you my strategy for finding good investments at a reasonable entry point. And as AI demand is surging, I'm catching up with the CEO of quantum computing company IONQ. We talk data centers, cybersecurity, profits, I don't know, and more. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.